So no new rules, but a quiet discouragement then from going out. No lockdown, but no furlough to get you through. It is, in other words, the worst of every world. If you're trying to run a business, a restaurant, a theatre, a club, we're back to those early days of the pandemic 300 seeming years ago, where no one was told not to go out, but it was very firmly frowned upon. So what will be that economic fallout from this period of what should be the busiest time of the year? Ben Chew is at our wall for us. Ben.
Yes, Emily, we are facing a winter of discontent, but not only for the obvious health reasons, but for economic reasons too. Inflation today came in well above expectations at 5.1% for November. That's the highest year-on-year increase in the cost of living facing the British public since 2011. And some analysts now think inflation could breach 6% early next year, which would be the highest rate since the early 1990s.
This is a really difficult winter. It is a cost of living crunch that households are going to be facing. Millions of them are seeing their incomes fall as real wages come down, actually, and as 3 million of those households on universal credit see their payments fall through this winter. And on top of that, we've then got prices rising, and we've got the risks of job losses with Omicron now on the cards as well.
The Bank of England has to decide tomorrow whether to raise interest rates. Ordinarily, with inflation at these levels and growing concerns about the persistence of inflationary pressures, it would not be a very difficult call. Yet many expect the bank's rate setters to hold off, not least because of concerns about the potential negative impact of a rate rise on the broader economy. Despite hopes of a strong V-shaped recovery, economic activity had slowed to a crawl even before the news of the Omicron variant broke, with GDP expanding by just 0.1% in October. And GDP is still well below where it would have been absent the pandemic and not currently on track to get back to that trend. And of course, the Omicron variant threatens to damage activity levels, upset the hitherto robust labour market and undermine consumer confidence even further. The distinct possibility of additional economic restrictions to contain Omicron would, some economists say, make for a strange backdrop to a hike in interest rates. We've been hearing on Newsnight from hospitality firms who are reporting a wipeout of business in recent weeks. And one can already see this in some data. This from Open Table shows bookings relative to the same period in 2019 in restaurants. So before the pandemic, the pink line is the 7-day average. Before the news of the variant on 26th of November, bookings were running at around 15% up on the same period in 2019. In the past 3 weeks, they've slumped to roughly the same level and are widely expected by industry groups to go down much further. Now, businesses like restaurants, pubs and gyms and shops have not yet been ordered to close by the government, yet business owners say the work from home requirement and the warnings from ministers and health officials, which were of course ratcheted up much further today, are having a similarly negative impact on the custom of some of them. That's why calls are multiplying for financial support for these sectors from the Treasury, such as new grants or a return of a targeted furlough scheme.
We're heading into a really big wave of this virus, and whether that means we need more restrictions to keep the NHS under control, or it means that actually we don't have restrictions, but people stop going to restaurants and actually or end up isolating themselves. Either way, there's economic pain ahead, particularly for sectors like hospitality that rely on face-to-face contact. In those circumstances, we have to learn the lessons of previous waves of this virus, protect people's incomes, and the best way to do that is a targeted furlough scheme for those sectors or those firms that are going to be hardest hit. You could either do it by sector or you could do it for businesses that are actually closed or where we see big falls in revenue. That's what they do in Austria, for example. But either way, it's perfectly doable and it's time we got on with it.
Now, the Treasury told Newsnight tonight that there are no plans to provide businesses with additional support, targeted or otherwise, and pointed out that hospitality firms are still receiving a low rate of VAT and business rates. Yet sources did stress that that was the situation today and that they are monitoring the situation closely. As we have seen, things can change quickly, both in the pandemic and the official response to it. Emily.
Ben, thanks very much indeed. Well, joining us now, the Michelin-starred chef Tom Kerridge and the artistic director of the Kerridge Theatre in London, Nicholas Hytner. Nick, can I just ask you to paint the picture for us of theatres at the moment, what we're actually seeing?
Well, more and more of them are closing every day because actors musicians, dancers are going down with COVID, backstage staff are going down with COVID, long delays before they're going to be back up and running all over the country. Audiences have noticeably slowed down, advanced bookings have fallen off a cliff. So yeah, we're in crisis mode at the moment.
So crisis mode because they are shutting, but they can reopen once the cast is back, right? It's not government imposed this, which presumably is better for you, isn't it?
Well, it doesn't really matter at the moment. What it means is that the 3 weeks of the year on which all live arts and entertainment businesses rely to build the foundations for their finances the following year are now kind of close to a write-off. I think they will be a write-off. Even today, the big hit shows in London have announced closures, some of them indefinite, some of them temporary. It's happening with pantos all over the country, and we're in big trouble at the moment.
Tom, is it the same? I can see you nodding. Is it the same sort of feeling in hospitality? What's going on in your restaurants?
Yeah, very much so. I mean, we have a number of restaurants that I know of today that have closed because there's staff shortages where members of staff have tested positive for COVID. So, I mean, many of those restaurants now have now closed for the Christmas period. But also from a guest point of view, there's a huge amount of cancellations coming in, which is an industry we can completely understand as to why. People do not want to test positive. People want to be able to spend time with their family and friends, particularly on Christmas Day. So there is an understanding of why those cancellations are coming in, but it's an incredibly important period for hospitality. Many places in hospitality, 20 to 25% of their revenue for the year can come in for the month of December through to January the 1st. So for those places to take a huge hit in bookings, it will have catastrophic effects throughout the industry.
Can I just ask you, Tom, on a practical level, when people cancel, when you get a massive number of cancellations in a restaurant in a short space of time, I mean, what do you do? Are you throwing away food? Are you laying off staff? I mean, what happens?
So nothing quite that dramatic as of yet. The cancellations have started coming in within the last couple of days. So the messaging coming out of number 10 has started having those effects over the last couple of days. So food is still there. Food is still operational. Most restaurants operate on a day-to-day basis. But what that means is you're not ordering the same amount, which has, it has that huge knock-on effect. There's nearly 3 million people that are employed within the hospitality industry. But wider than that, the supply chain, the agriculture, fishing, farming, the moment that the orders drop down from the hospitality industry, it has a huge ripple effect that goes throughout.
Nick, Ben was talking about what the Treasury could do now. Now, there's still the Culture Recovery Fund, which had this sort of, I think it was about 1.6 billion pounds. Does that still exist? Is that still kind of keeping people going?
I think it's largely spent. There may be some of it left. The important thing is, there was a partnership last year with government which involved a huge investment to enable us to recover. We were, as was the hospitality industry, urged to get out there and pull crowds back into town and city centres. We now surely don't want to get into a situation where the government's investment last year is wasted because the sectors that it has supported collapse in the new year. I think the mechanisms exist from last year to target support at these thriving industries, all of whom, restaurants, theatres, entertainment venues, all exist on minute margins.
So what do you need to see now?
We need to see short-term finance, we need to see loans, we need to see VAT looked at again, we need to see business rates looked at again, specific measures which we will return, both in financial terms. We are thriving sectors, entirely interconnected. The hospitality business and the entertainment business entirely interconnected. And the thing that we do is we revitalize
right.
towns and cities. We bring people out. We're there for the well-being of the entire population once we've learned to live with this thing.
Now, the Treasury has been saying to Ben, there's already a lower rate of VAT, there's lower business rates. I think Rishi Sunak himself is on a work trip to California at the moment. But if their response is these measures are already in place, Tom, what would you say back?
Well, the measures aren't quite in place. They were at 5% VAT. It's now back up at 12.5%. I mean, I would call for VAT to be dropped back down to 5%. furlough schemes were in place, but they're not there. The bounce back loans that those businesses did take, many of which to survive just to get to this point. We are now at a point where we're having to repay those loans. Yes, the business rates relief is still there, but there's now also ongoing costs. You know, there is the utility bills that have risen in the last 18 months. If you look at minimum wage has gone up. So there's a huge amount now of ongoing costs as well as the repayment of those bills. So, and then if you were then removing a huge, a large amount of revenue because guests are cancelling, all of a sudden many of those bills are not going to be able to be paid. And it is an industry that is right on a cliff edge, and you know it is intertwined within theatre, it is intertwined within nightlife, you know, that whole entertainment industry, that everything kind of together.
And do you think, I mean, we talked at the beginning about the difference between a sort of imposed ban, you know, stay away from restaurants, and a sort of make up your mind, sort of deprioritise or prioritise. Is it possible for Boris Johnson to say don't go to Christmas parties now? Do you think that's within his political gift now? Or are you happy that he's letting people make their own choices?
No, we need clear, decisive messaging here. The problem is that if it's not mandated, you know, it's that compensation package of being able to reimburse and make sure that these industries survive. And that's a job between Boris Johnson and Rishi Sunak, I think, to work out how they're going to do that. But I can also see maybe, you know, what are the reasons why Boris Johnson isn't agreeing with that. You know, he's already got almost 100 rebel MPs that are pushing back against his proposed restrictions. So, you know, are we playing politics with hospitality and theatre nightlife here? I'm not really sure.
Nick, we've talked about, I guess, the sort of the accountancy, the bread and butter, but, you know, the risk of getting philosophical for a moment with you. We've spent as a country or as a world, you know, 12 months, more than that, without theatre, without concerts, without live football, without live events. As somebody who works so hard to bring those to people, can you tell us what you think it does to the human soul to be without that?
Well, I can tell you that the hunger for it over the last 3 months has been overwhelming. There are people who can't live without theatre, without comedy, without going to a gig. Music, classical and contemporary, has suffered so much. They only had to put themselves out there again for the fans to come back. Everybody has something that feeds their soul. It's not compulsory to like one thing or another, but it's a very unusual person who doesn't want to go out and glory in the creative skill of a chef or of a dancer or of a comic. And we're now facing this, as Tom says, cliff edge where the whole thing could go up in smoke. I also would stress not just the interconnectedness of entertainment and hospitality, but you ran a segment a couple of nights ago about boom times for British film and TV. The foundation of the success of British film and TV is the theatre. The Crown is a theatre repertory company. The James Bond franchise is entirely peopled by writers, directors, actors from the theatre. These things all fit together. It's in everybody's interest that we get to the other side of this, which is why I say to the government, let's expand, continue, enhance the partnership. One thing we discovered was the extreme vulnerability of freelance performing artists who were left marooned, have been left marooned over the last 18 months. That's something we're going to have to address again once we are through this. Yeah. But meanwhile, promoters, producers, venues, these are the places that need to continue to exist in order to give those great artists a platform. Restaurants need to exist in order to get people together and enjoy themselves.
Right. And I guess the same question to you, Tom. I mean, do you think, if this is just a sort of, let's say, a 3-week blip, albeit over the most important time of year, do you think they can survive? I mean, are restaurants going to go under at this?
Yeah, undoubtedly there'll be many places that close their doors for Christmas and don't reopen. You know, like I mentioned earlier, 20 to 25% of revenue for quite a number of places come from a yearly revenue comes through in these most important 2 to 3 weeks. And if those places are not able to take that revenue moving forward into January, where there is already, you know, a huge amount of nervousness, bookings are very, very slow for the new year. People are uncertain of what's going to happen. That resurrection, that breath of life that comes into the the new year, it just isn't there, which means that many operators will not be able to operate, and also our owners are becoming exhausted with the lack of clarity of help.
Tom Kerridge and Nick Hytner, thank you both very much indeed. Best of luck.